Definitely this year has been a really strong year for Hong Kong IPOs. Not only the interest from investors are really strong, you got a really strong pipeline of really solid, high-performing and high-quality Chinese company that are applying to list in Hong Kong. I mean, this is definitely helped by the favorable regulatory policies from the Chinese regulator to encourage leading A-share company to list in Hong Kong, supported by a rather faster paced regime in Hong Kong to accelerate their listing. So 72% of the fund raised during this first half of 2025 came from those A+X share listing. So yeah, we believe that momentum definitely will continue amid the uncertainties surrounding around the trade tariff and geopolitical tensions.
So we're hearing 200 applications are currently being vetted by the Hong Kong Stock Exchange. So far this year, $13.6 billion raised. But of course, a big bulk of that was from contemporary Amprex, which commanded $5.2 billion after it exercised its over-allotment. In terms of the type of companies that are coming to market here, are we seeing any diversification in that aspect? There's been talk about these new consumption stocks.
Yes. New consumption, or we call new economy businesses as well. Companies that are technology enabled. They're also into new energy or embedding advanced technology, AI, into their solutions and also their business model. Those tend to be quite favored, despite that even they are still pre-commercialized or they already have a big market share. So we see a good diversification in terms of sectors, anywhere from industrial manufacturing, biopharmaceutical companies to AI technology to e-commerce. We continue to see companies in multiple sectors are actually applying for IPO. And we look at the overall new economy segment. They do represent at least more than 2/3 of those funds are raised by these companies. So we believe that in the second half of the year, that trend will also continue. That also is a reflection of the underlying transformation that we're seeing in the China economy, where businesses are becoming more resilient and also spending more, investing more in R&D so that they can have a unique advantage in a very highly competitive markets.
So we're talking about Hong Kong's attractiveness as a listing venue that's benefited from policy, as well as this big rush by mainland companies to be listing into the Hong Kong market. Some of it is a geopolitical risk as well. How are you seeing the geopolitics play into the Hong Kong cards when it comes to its strong IPO pipeline?
It definitely plays a key role. I mean, traditionally, a lot of the technology companies from China do favor the U.S. market. And given the tensions, many of those would choose more home market, either A-share or H-share. And the fact that the slowdown continue on in China in terms of listing, many of these mainland Chinese companies would offer listing in Hong Kong, which is an ideal location for them, as we have a lot more exposure to international investors compared to the Asia market. So we believe that this is definitely a strong factor why we're seeing a really solid pipeline for IPOs.
In terms of that pipeline, have you heard anything in terms of the companies that would potentially be coming from the Middle East or Southeast Asia? Of course, ever since Hong Kong started closer ties with that of the Middle East back in 2023, we've been salivating over the prospect of Saudi Aramco coming to the Hong Kong market. That has yet to happen. Are you hearing anything? What kind of companies from the Middle East could list in Hong Kong?
I think looking at their domestic market in the Middle East, it could be the financial industry, and there also could be energy sector. Currently, they have not yet contributed significantly to the fund raised in 2025. I mean, it could. I mean, there are we now have the confidential filing channel for companies that are in the specialist technology sector. So it really depends if those companies would fit that criteria. But currently, our outlook for 2025 in the second half, we believe will still primarily be coming from the mainland Chinese company.
Are you able to give us an outlook for the full year in terms of Hong Kong market? How many companies do you expect to list and the total funds raised?
Yes, we do expect between 100 to 130 companies overall that will list and raising a total of 200 and 250 billion. So we already had 107 billion. So we believe that we should be able to double that in the second half. And given the strong pipeline, as I mentioned, with 200 companies already in the pipeline, and then the accelerated approval process for Asia company in the application, many of those should be able to complete their IPO by the end of this year.
So it sounds like you do expect Hong Kong to be able to hold on to pole position for the full year in terms of IPO funds raised. How does Hong Kong compare with the rest of the world or other markets like the New York market, NASDAQ, Shanghai, or Shenzhen?
Right. I think Hong Kong is quite in a very unique position given all the uncertainties in the U.S. market. I mean, U.S. continue to be a really large market, but given this past 6 months, we have seen investors are really in favor of more diversification in terms of geographical allocation, as well as they are really attracted to the, we call the Chinese innovation. As I mentioned, that many of the Chinese companies have really embraced and adopted advanced technology in the businesses. So I think that gives Hong Kong a really good opportunity to bring in more high-quality company to list. Yeah, I believe that Hong Kong will continue to remain strong. Obviously, on the basis that there were no major market turmoil in the second half of this year.